Good morning, and thank you for the opportunity to give me presenting our consolidated business results for the first quarter. Firstly, I would like to inform you that during today's session, I want to cover a summary of consolidated business results for FY 2021 quarter one, operating income, industrial machinery business, automotive business, and the last part is providing a very brief summary of the current situation. To begin, I would like to provide you with an overview of our consolidated business results for the first quarter ended June 30, 2021. I only have about 5 slides, and I would like to spend most of our time together in response to any question you may have. Okay, and this slide shows a summary of our first quarter consolidated business results. We recorded sales of 213.5 billion yen with 9.2 billion yen in operating income and an OPM of 4.3% by achieving positive figures in the other profits categories. Sales increased 84.6 billion yen year-on-year, and operating income increased 22.1 billion yen year-on-year. I would like to give you a brief overview of the industrial machinery business and the automotive business separately later, okay? As stated in the comment on the slide, the trend of depreciation in the value of the yen was a factor that assisted business results. The impact of exchange rates on sales was around 9.5 billion yen and around 2.5 billion yen on operating income. Okay, and this slide shows the factor behind the change in operating income. First, a major factor is the 25.1 billion yen increase in operating income due to value mix. Increasing in sales excluding foreign exchange rates and exchanges in sales prices is estimated to be approximately 75.0 billion yen, and the effect of the increase in operating income calculated based on this is approximately 30.0 billion yen. On the other hand, there is also a slight deterioration in the mix, due in part to the mix in the automotive and industrial machinery businesses, as well as the regional mix. In addition, we estimate a negative impact of around 2.5 billion yen from inventory evaluation, including unrealized gains on inventory and other factors. And as for changes in procurement costs, as I explained at the beginning of the fiscal year, we had factored an increase in raw material prices, mainly for steel materials. Into our forecast, we have recognized these rising raw material prices have started to push costs up to the tune of around 1.2 billion yen over the past 3 months. On the other hand, we have achieved reductions of around 1.0 billion yen in external procurement costs, bringing to the total impact to minus 0.2 billion yen. In terms of changes in sales price, the decline in sales price was around 0.5 billion yen. On the other hand, although the comment on the slide states transfers to increase cost to sales price not only increase raw materials costs, but also price increases in response to market conditions, mainly in the industrial machinery business, were transferred to sales prices, amounting to around 0.6 billion yen. These factors combined generated an impact on profit around 0.1 billion yen. As it has only been 3 months, we haven't seen a significant increase or decrease. However, although the increase in raw material price was expected to be around 6.0 billion yen for the year, judging from current business conditions, we need to be prepared for further increases. We have not revised for our business forecasts to factor in the transfer of increased cost to sale prices in light of this yet, but these factors can be described as a major focus in our business activities. Moving on to increase in cost. Costs increased by around 6.7 billion yen year on year. The biggest factor was the 5.0 billion yen increase in labor costs. Other factors were increase of 0.7 billion yen in depreciation and amortization and equipment, and around 1.0 billion yen in selling, general, and administrative expenses. This amount included a 0.4 billion yen increase in transportation costs. Roughly 3.5 billion yen of the increase in labor costs came in from subsidies received from government and so on. So the difference between the two figures in the increase, consequently, the outstanding difference of 1.5 billion yen correspond to the increase in labor costs in a like-for-like comparison. As I stated on the first slide, exchange rates had a positive impact on the profit of around 2.5 billion yen, resulting in total operating income of 9.2 billion yen, including equity method profit and other operating expenses. Okay, and this slide shows the industrial machinery business. Sales were 82.2 billion yen, with sales of 68.1 billion yen for industrial machinery bearings and 14.1 billion yen for precision machinery and parts, up 40.6% year on year. For the segment overall, segment income was 6.5 billion yen, up 7.2 billion yen year on year. Looking at the subsector within the industrial machinery business, machine tool and semiconductor manufacturing equipment related capital investment is currently booming, starting with semiconductor manufacturing equipment. Machine tool orders have also subsequently continued to grow. In addition to investment in Japan, overseas investment in China is also rising at present. Initially, it was thought that China EMS investment was driving capital investment. However, it now appears that enthusiasm for capital investment is returning in a wide range of sectors, including automotive-related sectors. And the graph to the right of the table shows quarterly changes in sales as well as segment income and segment income margin. The figures on the far right are the current figures, which are 82.2 billion yen in sales with margin of 7.9%. As you can see, there has been a cyclical trend over the past 24 months, as well as a drop. Given a big impact of COVID-19 in the same period of the previous fiscal year, however, we view the quarterly business scale of 82.2 billion yen recorded in Q1 as an indication that the economy is recovering reasonably well. Okay, next we will move on to automotive business. As you can see, sales were 121.7 billion yen with a breakdown of 64.5 billion yen for automotive bearing and 57.2 billion yen for automotive components. As a result, segment income was 1.7 billion yen, achieving a return to profitability. Sales for the automotive business overall increased by 84.5% year on year. In terms of the breakdown, both automotive bearings and automotive components increased sales by over 80% year on year, recording a rebound. And there are a few comments on the bottom of the slide. but looking at the recent global automotive production trends, production for the current April to June period was around 18.8 million units, according to research by NSK. This is a 49% increase year on year. Looking more closely at the breakdown, the figure at Japanese OEMs, which are major customers of NSK, was up 71%. From a global perspective, this indicates that Japanese OEMs are emerging from the situation quickly and entering a growth phase. Looking at our business results based on this, both automotive bearings and automotive components recorded sales growth that exceeded the market trend at 87.8% and 81% respectively. And on the other hand, semiconductor shortage also had an impact. I think it is easier to understand visually if you look at the chart to the right of the table, but sales for the first quarter of the current fiscal year have declined to 1,021.7 billion yen from 131.1 billion yen in the most recent fourth quarter. This indicates production by automotive manufacturers has decreased precisely because of the semiconductor shortage. We estimate production may have declined by around 2.2 million units in the first quarter based on our understanding. When I spoke with you at the beginning of the fiscal year, we expected about 1.0 billion units might be affected by semiconductor shortage in the first quarter. And there has been a decrease in sales that correspond to the difference between these figures. Okay, and now we arrive to the final slide. The final slide provides a very brief summary of the current situation. We believe we are not yet at the point of revising the consolidated business forecast for the fiscal year ending March 31st, 2022, which we published when we announced our business result on May 11th. Assuming there is no change, we have also decided to maintain the dividends at 25 yen per share for the time being. There are a few comments on this slide about current business conditions and trends for the industrial machinery business and the automotive business, but I think these are summarized in the points I made earlier. Okay, and in the third comment, cost increases for raw materials and transportation and so on, they are expected to push costs up, but I would like to provide you with an answer on this later during Q&A time as needed. In addition, the COVID-19 pandemic is currently spreading again, starting to Southeast Asia. We feel like this risk is increasing, and NSK experienced some suspension of operation due to the impact of lockdowns in Southeast Asia during the period, including ENN's Malaysian production facility for miniature ball bearings. Production is currently recovering, but some of the effect on lower sales and profit is including in the consolidated business results for the first quarter. Okay, and this ends my summary of financial results for the 3-month period. Thank you so much. Thank you.